What's up fam, welcome to this channel. In today's video we're going to be talking about institutional order blocks. First, before we're able to analyze what institutional order blocks are, we have to be able to understand what institutional candles are. Okay, we have to understand what institutional candles are. So sit back, we'll be right back. Institutional candles. These are the candles that run out the liquidity, either from the downside down to the upside, or from the upside to the downside. Whichever way, it happens vice versa. If they take the liquidity from the downside, that means they're also going to take the liquidity to the upside also. So your ability to understand what price is doing gives you an edge over the market. Take for an example, if the forex market takes liquidity from the downside, those candles that run out the liquidity to the downside, those are institutional order blocks. Those are institutional candles. So I'm going to be explaining it from this chart here. Okay. This right here took out the liquidity down to this side here. See, there was money sitting here below. Take this out. There's money here, so they took out the money from the downside and the upside. There was money sitting here, so this candle here, this whole move here, took out the liquidity from the downside to the upside, and they equally went down to take out the liquidity that was beneath this low here. So approximately this has been taken out, this has been taken out also. So now what you're going to be spotting, this candle here is an institutional order block. This last candle that took out the money to the upside, this is an institutional order block. This also is an institutional candle that took out the money to the downside. So approximately while they were running out liquidity, I'm going to be spotting out the order blocks for you now. This is an order block. Price will not just come down, it must definitely pull back. It pulled back to this order block and ran out the liquidity down to the downside. But before it got to the downside, it equally got to this zone also. This is another order block. So this is one order block, this is another order block. So now, since we know they've taken out the liquidity from the downside, definitely they're going to be going up because the trend is bullish trend. So what are we going to be doing? If you want to look for an entry, this is what we do. We wait for price to break the first order block, which is this order block, and also this. See, when they go to this order block, there was a pullback down to this zone, and this was an entry for us. So if you are to enter, this is how we enter the market, this zone here, and we ride it to the upside. So guess what, they got to the next order block, which was this candle that started the move to the downside, and this was an entry for us also to take the market to the upside. Take for an example, when price is moving, when it gets to an order block that is very strong, if it's not able to break that zone, it respects it, pull back and continue going up. Look for an example, this was what happened here. So before you spot an order block, you should ask yourself this question: where is the liquidity? Where is price trading towards? So when price is able to break through a zone and take out the liquidity, so those pullbacks that you get, those are order blocks. Those are order blocks. Now I'll simply define an order block, an institutional order block, as a zone where financial institutions and central banks accumulate orders. Now I'll tell you, I call it a zone where they accumulate orders because why? Take for an example, if I'm to take this market to the upside, I'll wait for the price to get to this order block here, this one here. So I should be looking for my entry here in this zone here. See, they gave me an entry to put my entry here and take it up. Now if I miss this out, I'm going to be waiting for the next order block, which is this zone here. Take this out. So I'm going to be waiting for price to get to this zone. Give me an entry here in this zone, because I know we are trading up. I'm going to be entering here and taking the market to the what? To the upside. So a simple way to spot another block that price always respect is either the open price of the candle that triggered the liquidity to the upside, or the closing price. Now for a bullish market, see what happened here. This was the last candle, this was the opening price, and this was the closing price. Now they came and respected the closing price also in this zone. This zone here. So that was when they pulled back and gave us an entry in this zone to take the market to the upside. Now we're going to be asking ourselves a simple question: where do we identify institutional order block? How do we identify it? How do we identify it? Like I said, this is an order block because why? Anywhere you see candles that take out liquidity from the downside to the upside, that zone that was created here, the last institutional candle that took out money to the upside is an order block, either the open or the close. We know candles, bullish candles, they open from the down and the close at the up. So either the opening price or the closing price of the bullish candle is an order block. Because why? Price ran out the liquidity that was here. So automatically this become an order block. And second order block we have here, don't forget, there's equally liquidity at the zone. So price came and created an order block here, and equally came back here and ran out the liquidity that was sitting below all of this. So automatically this becomes an order block. This was the last pullback. This was also another order block. This also is another order block, because this was the one that took out the liquidity that was sitting here. Now I'll talk about a simple way to spot an order block. Go for the extreme order block. If you can be able to spot the extreme order block, now take for example, this market was coming down actually, and it created an order block here, right here. But take note, this was not an extreme order block. Some traders were selling here, which was wrong. Now I always tell you, wait for an order block which is valid, which is the extreme order block. See this? See what happened here? Now this was the last candle that took out money here. There was money here. So this candle here was the last candle that took out money to the upside. So price later came back. Instead of dropping to the downside here, later came up back and respected that zone, making this zone an extreme order block. See it here. So whenever you see where there's a run out of liquidity, go for the last candle that ran out the liquidity to the upside. That becomes an order block, because price is bound to respect that zone. Price is bound to respect that zone. And that's where you can start looking for your entries. The extreme order block is always valid. Let me give another example here. Okay. Now something happened here. There was money here. Some folks were selling this shit down to the downside, and there was a run out of liquidity to the upside. But don't forget, all of this was accumulated as an order. Some persons were selling here. Some traders, they were taught how to sell on double tops and triple tops. Please let me quickly say this: wherever I see a double top or a double bottom, please take note, there is always money sitting there. As traders of institutional candles, we don't trade double tops and double bottoms, because why? We know price is accumulating orders. Take for example, now they took out the money here to the upside, and this was the last candle. And guess what? They came for this other liquidity that was here. They came for these guys and took them out. And guess what? They didn't just start going there, they accumulated more orders to the side, and they went up back to the extreme order block. This was the extreme order block. Don't forget, like we were taught, the last lower high is as a beginners, we were taught the last lower high that was the last pullback before we went up is our break of structure. So price came back to it, giving us what? An order block. And guess what? We ran out these guys to the downside, took out the money that was there. All these traders, they were buying, they were selling at this one, they were wrong. And guess what? Some person started buying at here also. Here, all the zone here, traders were just buying. So we ran them out. We ran them out. And don't forget, like I said, the last order block that we can find is here. Guess what? We broke above it. Now, giving us another order block here. Guess what? Came to the downside, and we started going back to the upside again. So you always see this thing happen. Now I'm going to be saying one thing simple. Now if you observe clearly, there's something called the break of structure here. This was the break of structure. Other blocks are also respected after a break of structure. Now take for example, like we were taught as beginners, you wait for a structure to be broken before getting into the trade. See, there was a break of structure here. Liquidity can also be referred to as well break of structures. This was a break of structure here. This zone here was a break of structure. So guess what? Price came back up. Some persons got here and was selling. No, that's wrong. This is not a holy ground for you to start selling. This is a double top, guys. Remember what I said about double tops? They're always risky to trade from. As traders of institution, we don't trade double tops. See this? This is a double top. It is just to induce low buyers and get into the chart. This is a double top. It's never a safe ground. Guess what? The double top led to what? The last institutional order block. And they went back up and took out these guys that were here trading. And they guess where they came to? They came to this last order block that took out money to the upside. See? So started taking money to the downside also. So always wait for price to come to the extreme order block before getting to the chart. It's always important. We as a beginner, when I was a beginner in the trade, in the forex market, what I was doing was, whenever I see this as an entry trigger for me to pull my trigger here, because I think this is a strong zone for me to start taking this shit out. Guess what? I get stopped out. Because why? The extreme order block has not been respected, which happens to be this last zone here. It has not been respected. So I'm going to be saying, one way smart money accumulate orders: the last candle that took out money to the upside, either the open or the close, or the last pullback before we go to the last institutional candle that took out money to the upside. Now what I mean is, this is the last candle that took out money to the upside, because there was money here. Like I said, there was money here. Some persons were buying, we are selling us at this zone. Some persons were also thinking of buying from here. Yeah, those they were buying were correct. The market actually went up. Guess what? They were in profit, but after some time they got run out. But don't forget, the last candle is what we trade with. This is the last candle. This is the last candle that took out money to the upside. Price then, either the price respect this last candle, or it comes to the last structural level here, this also is an order block, because this was the last candle, this was the first candle that led to that move up. So price respected it and we started dropping to the downside. So the last institutional candles are always vital in the forex market. So yeah, like what I said in my last previous video, if you've not watched it, talking about liquidity, how smart money run out liquidity from the forex market, I talked about this video and I was like, when I get into a chart, what do I do first? The first thing I look for is, where is the liquidity? This strategy has always been working for me, going towards where the money is. That's my strategy. That's how I trade the forex market. I always look out for where the liquidity is, because I know price is always being drawn towards the money. The institution do not want retail traders to profit in the market, so they always look for a way to stop them out. So what I do is, the best way you can win is to trade with institutions. The best way you can win in the forex market is to trade with the institutions. So what I do is, I spot out the liquidity zone. Where is money sitting? Money is here, guys. Money is here. Money is here. What I do is, I wait for them to run out the liquidity, and guess what? They took it to the upside. So I know price has taken money to the upside. They're definitely going to be taking the price to the downside also. So what I do is, I just patiently wait. At first they came and took out the money to the downside, but there was no clear entry for me here. It wasn't here. What I do is, I'll be waiting. Don't forget, the equally generated money here, more money here. Now there's more money here. This seems like a double bottom to me. Don't forget, they took out money to the upside. If you're to come back to this zone, they took out money to the upside. But well, guess what? They didn't take out the money to the downside in this zone here. See? They didn't take the money. So definitely money is sitting here. Money is there. So I know price is going to be drawn to that area. What I wait for is, I wait for them. They came down actually and generated more liquidity at this zone here. This same zone, making it a double bottom. Now they took money to the upside. I told you before that smart money will always buy before they sell. Took out the money to the upside, and guess what? They came to this last candle, this last structural level, which happens to be an order block, the opening price, and guess what? They closed there. That was when they took out the money that was resting beneath all of this. Took out money resting beneath all of this. So this is where I should be jumping into this chart, right somewhere here, because I know what, this candle came and respected the zone. So that is it all about talking about institutional order blocks. There's really no much deal about it. All you have to spot is just two things. One, the last structural level that took out money either to the upside or to the downside, or the last institutional candles that took out money to the upside or to the downside. So price is being drawn towards the money always. So your trading should be trading towards where the money is. Trading towards where the money is. Price is being drawn towards the money. This keeps happening all the time zones. It keeps happening. See, guess what? There's money here. If you're to talk about this, there's money here. And this was liquidity here. There was liquidity here. They took out the money resting beneath all of this, came to the downside. Guess what? There's money here. So my target should be this zone. The target should be this zone here. So I'm going to be getting into the chart here, somewhere here, because this is another block. Guess what? This is another block. This is an entry. Now trading towards where this zone here. So I would have hit my take profit if I did so. This keeps happening, guys. And see what happened here. This is a double bottom. Price came and gave us a double bottom. I knew there is money here. So what I'm going to be waiting for is them to come to what? This other block. Let's go back and see what they respected. See? So the guys, this is another block. Either the opening or the close of the candle. This is the open and this is the close of this bullish candle. Guess what? Price later respected it in the future. And guess what? They ran out the money that was here. They ran it out. So this keep happening on a daily basis. I hope this video is helpful to you. Don't forget to comment if you have any question in the comment section below. And also, if you want to watch the video about liquidity where I talked about how price is being drawn towards the money, I'm going to be leaving the description below how smart money run out the liquidity. So until I come your way again, see you.